I'm here at KPMG's U.S. Insurance Conference, and we just heard from Constance Hunter, our chief economist, on several topics. But today we're going to talk about interest rates and the aging of the population. So, Constance, global phenomenon around interest rates, low interest rates, that comes up in every country I visit. Could you talk a little bit about that?
Sure. I think the first takeaway is that I don't think that global interest rates are going to go up significantly anytime soon. So this is a challenge insurance companies are going to continue to have to manage. And so if we look at a country like Japan that's had low interest rates for a very long time, they are now being held down because at the short end of the curve, interest rates are actually negative. And this means that at the long end of the curve, we're looking at less than 50 basis points for a 10-year bond. Really challenging for Japanese insurers. If we move to Europe, we also have negative interest rates at the short end of the curve, but we're seeing a little reprieve. Those yield curves have gotten steeper, but we're still under 150 basis points for a 10-year bond. Then we move to the United States, where there really is hope that because the Fed is reducing the size of the balance sheets, we're going to see some term premium return, and that 10-year yield is going to go from about 3% to maybe 3.25, 3.5. But this is nothing like we saw in the previous decades, and in those decades where we didn't have as much longevity.
Yeah, so the big message is it's not going to change anytime soon, unfortunately. And as we think about longevity and the aging of the population, how are those interrelated, and what do you see in some of the statistics you've been looking at?
Yeah, sure. So one of the big determinants of how fast an economy can grow is the sum of the growth rate of the working age population plus the growth rate of productivity. You add those two things together and you get what's called potential GDP. Because the working age population has been shrinking for so long, that potential GDP is declining. And what we're seeing is that combined with this other trend of longevity. We've never had a period in the history of the whole world where we've had a declining or slowing working age population, plus people's longevity just increasing by leaps and bounds every single decade. And we have a system that was set up where people were expected to reach a certain age and retire regardless of how many years they would live after retirement. So originally it was 10 to 15 years, but now people are retiring. If they keep that same retirement age of 60 or 65, they're ending up living 20, 25 years past that. So we need to shift and we need to adjust. And even though governments aren't necessarily shifting and adjusting as fast, we're seeing populations shift. So I mentioned Japan with the ultra low interest rates. Well, part of what's happening is you're seeing the participation rate of those over age 65 in Japan. It's almost at 30%. In the United States, it's above 20%. The really big outlier is Europe, where it's only about 4.5%. So I would expect that that's going to rise as we go through time and people realize that they're going to be living so much longer, and maybe some of these social safety nets aren't going to provide as much, and lower interest rates don't provide as much income to someone living in retirement.
This is fascinating, and we could go on forever around the interconnectivity between low interest rates and the aging of the population. Thank you so much. And that's the state of play around interest rates and aging.